Well, 2 weeks ago, when I gave a recommendation to buy the euro, at the time it was trading around 117.85, and I recommended people to buy the euro at market for initial target at 119.50. Then the next one at 120 even, the psychological target. The low after the recommendation was 117.41 against my stop loss below 117.32. So it was a pretty good call, and the euro later rallied strongly to a new 30-month high at last Thursday's post ECB press conference, because Draghi did not jawbone the euro lower. Although that the single currency continued its recent ascent and climbed to a fresh highs of 120.93 in Asia last Friday. But then profit-taking set in, and the euro could not hold on to its gains. And yesterday we saw a clean break below the 120 level. So the outlook in the coming days, at least until next Wednesday's FOMC meeting, is bearish in my view, because you can see from the daily chart there was a prominent bearish divergence on the MACD when the euro made the new high at 120.93. So it looks to me that we are going to see choppy consolidation for the remaining of this month with a downward bias. So the recommendation or the appropriate strategy would be to sell the euro on rebound, or to buy on the further decline. And from the chart, you can see that the daily support is 118.24, and if we break below that, I think a lot of the long euro positions will be washed out, and we will see a quick decline at least to 117 figure 10 region. So my suggestion is to sell the euro on rebound to 120.20. Initial target is 118.70 with a stop loss 120.95. And if we see a euro going down to 117.05, I would be a buyer there for at least a rebound back to 118.55 and stop loss 116.30. So that's my take on the euro, at least until the FOMC next Wednesday's end. Now let's look at the medium-term picture on the euro. You can see from this weekly chart, the euro has been rising steadily, and then in the third quarter, the up move then began to accelerate. So the low in January, which was a near 14-year bottom at 103.41, remains in force. And you can see that the trend is highlighted by a series of higher highs and higher lows. And so as long as the support at 116.63 continues to hold from here, then I am bullish for the euro to head to 122, and then towards 125, the next psychological barrier, either at the end of the year or beginning of next year. That 125 is pretty close to the minimum 38.2 Fibonacci retracement of the entire long-term downtrend, which started from the post-Lehman crash, the record high at 160.40 to 103.41. So for the medium-term euro bulls, if we see the euro coming off to 117 in the next couple of weeks, that should present an opportunity to enter long, and stop loss either below 116 or 115 even. Just depends on how deep your wallet is and how large your ultimate upside profit objective is. Thank you.